All right, welcome back to another episode of Stay Focused. So today we have a very special guest, Nathan Hartseil from First Home Mortgage.
We're here to talk to Nathan a little bit, getting his expertise on what happened in 2016, what we saw in the mortgage world.
2016 was a good year in the real estate industry, especially in the mortgage industry. Rates stayed pretty much an all-time low. Over the last 18 to 20 years, I think the average interest rate's like an 8%. Some points as high as 18% in our last 18 to 20 years. For the better part of the year, I'd say we were in the threes, whether it be middle, high threes.
And is that 30-year fixed rate?
It is 30-year fixed rate mortgage.
Yep. Conforming, all that. Yeah.
Yes, which is just outstanding. So it was a good year for mortgage bankers, mortgage brokers, loan originators in general for refinance business.
So you guys still have a good deal of refinance business happening?
We do.
Okay.
Well, we did.
Yeah,
We'll get to that.
as the rates,
It's starting to come up a little bit, right?
Absolutely.
When those rates start coming up, I'm sure that business evaporates for you.
Absolutely.
Yeah, the buying power though for people buying homes has got to be pretty strong, right?
Yeah, so some buyers got some good deals on mortgages, and people who refied at these in the threes did really well.
Absolutely. And what we found was a lot of people cashing out and putting money back into their properties, which is good for the real estate industry.
And the economy at whole. When people are refinancing, they're renovating, they're buying appliances,
they're spending money, they're
spending money. Overall, the real estate business contributes to, isn't it something like 25%?
27%.
27% of our country's GDP. So mortgages play a big part of it.
They do. They do. One thing I have to say, I think 2016 was a learning experience. We know now that there's not a ton of profitability in mortgage origination when rates are so low. What I think we've been doing is compensating for some of the world economy downfalls. When Brexit happened, we lower rates. We have a rough week or we have a rough couple weeks in the stock market. There's uncertainty. We lower rates. So we're compensating with mortgage interest rates for some other downfalls that we're having in our economy, not even just the United States, but world economy.
Yeah.
So that's been a big effect, and there will be long-term effects. There always is.
So are you saying it wasn't profitable, or?
Well, the volume's there. So you're making less money off more volume, which is good. But what that's going to start doing is limiting programs, I believe, and just limiting lending criteria in general.
Oh, really? So you're talking about a little bit more restriction, a little bit harder to qualify? How are you thinking? Just different
That's a good question, because where we're going, I do believe with the recent rate increases and the expectation of rates to continue to increase, I think we'll, on the contrary, have to loosen regulation.
Interesting. It's been really interesting in my position over the last 4 years, really, because what we keep getting coming down the pike, usually late fall, is okay, this is what we got to look forward to in the forecast for the next year. Interest rates are going to be coming up. Interest rates are going to 4.1.
We've been seeing projections every last 4 years, like by the end of the year, interest rates up around 6% or in the sixes for the last 3 or 4 years. Now it's like that the boy, crying wolf, or is this a reality? No one has a crystal ball.
No, they do not. They do not. I mean, predictions that I've seen between 2015 and 16, purchases increased about 10%. We had a great year with refinances, up probably about 30%. From 16 to 17 now, it looks like purchases are going to stay on the same trail with predictions, up about 11%. But it looks like that refinances are going to decrease anywhere from 40 to 48%, which is huge.
Let me give you a plug then. So, I know a lot of us maybe don't check these things very often. So if you are a consumer homeowner out there that has a higher interest mortgage rate, that you're over 4%, you should really give Nathan a call and say, hey, is this something we can work with? So I know there's probably not a heck of a lot of them out there yet. But I will, say,
Absolutely.
call you and see about refinancing before these rates start to come up.
Absolutely.
And along those lines, can you tell some of our watchers out there what are some of the programs that you do and you
Sure.
and you work with?
Sure.
So that
Well, I'm not even off a bad note of rates going up a little bit. One positive thing is loan amounts have increased for the year of 2017. Regular conventional were up, I think, about $7,000.
right, and that's set by
going into the
Fannie Mae and Freddie Mac, the two big
Absolutely.
quasi-governmental agencies that establish a lot of loan programs.
So that's a positive. I think what we're really going to see this year too, in the condo realm, FHA is opening their doors up to more and more condominiums where it was so restricted in getting condos approved through FHA. They're trying to make a movement for a streamlined process to get these condos approved and add those to their portfolio.
Yeah, interesting.
Great, and that helps us in the city of Boston and in the cities a lot more.
It does,
because we sell a lot of condos.
With those Fannie Mae, Freddie Mac increases, FHA will follow, so they'll have a larger volume of lending also.
Great. Yeah. What else do you see in 2017? Anything else that we should be on the lookout for, or where?
It's very, very unpredictable.
Yep.
We're hoping in the mortgage industry for some loosening of regulations. It's been getting tighter and tighter, regulatory. So that would really help our position. As well as, like I said, the increase in lending definitely helped.
So, one of the things to also chat about, with the programs loosening up, and one of the things that I don't think a lot of people realize out there is that when you're talking about buying a home, especially first-time buyers out there, we do have a multitude of programs, whether it's, if you're a veteran and looking at a VA loan, looking at FHA for a lower down payment. Mass housing has been a good option in the past. But one of the things that I think holds a lot of people back from making a home purchase, especially that first time one, is not realizing that you could put down less than 20%. So those are options, are they not?
They are options.
Yeah, you don't need that kind of down payment to buy.
Yeah,
and a common misconception is, the strength of the loan.
Yeah.
On our end, we have automated underwriting systems in place, and we have what I'd like to think common sense underwriters in-house and in place. Okay. So the amount of down payment really affects their ratios and what they can qualify and afford. It really doesn't affect the strength of a buyer unless there's reserves that come into a factor. Yeah. So, 5% down to 15 or 20% down doesn't mean that the quality of buyer or the strength isn't there.
Great. And another question I think a lot of people would like to know about is, do I have to have a 750 credit score to get a loan?
No, you do not. And to be honest with you, government programs such as FHA, Rural Development, USDA, mass housing, we've seen more and more leniency. We've actually seen the opposite. Qualifications for credit score with a lot of it, even investor base, are lowering.
Just a little, something for you guys to keep in mind out there if you are thinking first-time home buyer, or maybe even a second-time buyer that's seen something happen with their credit in the last number of years. I think a little bit of misconception is that you have to have a 750 credit score, and what a lot of people don't realize is that that's not necessarily the baseline.
So you can work with people with credit scores that aren't 750. You can work with people who don't necessarily have 20% down.
Absolutely.
Great.
And credit challenged clients. I mean, when our government came out and said we're going to instill programs, we think everybody should own a home. If you're on the path to where you're showing and demonstrating, hey, I pay my bills, I can build up, times may be rough, but a little bit of savings. There are programs out there. Right. And even if you don't qualify today, I tell most of my clients, you are pre-approved. You may be pre-approved 6 months from now. If you listen to somebody and somebody who's been doing this a while, they put you in that right direction, you will be able to buy a home.
Yeah.
Great.
Great. Well, thanks.
Yeah. Thanks for sharing your insights with us.
And thanks, Nathan, for joining us here today. We really appreciate it.
And you can follow the links below here if you have any other mortgage questions or need to apply, get a pre-approval. Great first step in buying a home. How to reach Nathan, just click below.
Yeah, and thanks for watching today. Don't forget to Don't forget to subscribe to our YouTube channel.
And like us on Facebook.
Stay tuned
And stay focused.